Hello students, welcome back to Avneet Academy. In today's class, we will solve a problem on process costing. So we have already solved two problems on process costing. Let's start the problem number 3. A product passes through two distinct processes, that is process A and process B, and the output is transferred to finished stock. The normal wastage of each process is as follows. In process A, the wastage is 3% of the units entering in the process. And in process B, wastage is 5% of the units entering in the process. Wastage of process A was sold at rupees 0.50 per unit. So whatever the wastages we have got in process A is sold at rupees 0.50 per unit, that is 50 paise per unit, and that from process B at rupees 1 per unit. 10,000 units were introduced in process A. So the starting input of process A is 10,000 units at rupees 2 per unit. The other expenses were as follows. Sundry materials in process A amount is 2000, process B 3000. Wages A 10,000, B 16,000. Expenses in process A 2100, process B 2375. Actual output from process A, the actual output is 9500 units, and in process B 9100 units. Prepare process accounts, abnormal loss account, abnormal gain account, and finished stock account. So in this problem, what we have to prepare? Process account, that is process A and process B accounts, abnormal loss account, abnormal gain account, and finished stock account. So it is a complete problem. In this problem, we will cover all the topics, that is preparing the process account, calculation of normal loss, calculation of abnormal loss, abnormal gain, and we will prepare the finished stock account. So this is a complete 15 marks problem. So we'll start the solution. First, we'll prepare the process A account. Okay, solution. Right here heading process A account, and the columns particulars, units, or you can write input also here, cost per unit, total cost, particulars, output or units, cost per unit, and total cost. So first we have to take the number of units introduced in process A. So in process A, 10,000 units were introduced in process A. So we'll take that first. Unit introduced, quantity is 10,000 units, and the rate per unit, cost per unit is rupees 2. Multiply 10,000 into 2, you will get 20,000. So after taking the input, we'll take the expenses of process A. Sundry materials. Sundry materials amount is 2000. Write in total cost column. Wages 10,000. Expenses 2,100. Okay, all the expenses are over. Next, in process A, there is a wastage of 3%. So this wastage, 3% wastage is considered as normal loss. And normal loss we will take on the credit side of the process account. So right here, normal loss. So this normal loss, 3% we will calculate on the unit entering in the process. So in process A, how many units are? introduced 10,000 units. Yes. So we'll calculate this normal loss on number of units introduced in process A account. That is 10,000 and the normal loss is 3% into 3%. Calculate it. 10,000 into 3%, you will get 300. So the normal loss or the normal wastage is 300 units. See this second para. Wastage of process A was sold at rupees 50 paise per unit. So whatever the normal loss or the wastages we have got, that is sold 50 paise. So we'll write here amount 0.50, multiply this 300 into 0.50 and you will get 150. Next, they have given actual output we have to take. Okay, all the expenses we have taken and we have calculated normal loss also. So, from process A, the output is 9,500. So, whatever the output we have got in process A, that is transferred to next process, that is process B account. So, we'll write here output transferred to process B quantity, it is provided in the question, that is 9,500 units. So we'll write here 9,500 in units column. Amount, cost per unit, they have not mentioned here, that we have to calculate. For that, we'll prepare the notes. Note number 1. First, we'll calculate the normal output. So the formula is normal output is equal to input minus normal loss. Input. So in what is the input of process A? How many units are introduced in process A account? 10,000 units. So take here 10,000 minus normal loss. Normal loss quantity is 300. Take here 300 and from 10,000 minus 300 you will get 9,700 units. This is the normal output. Next we'll calculate the cost per unit. Okay. Quantity we have written here. Output transferred to process B, that is 9,500. Rate they have not mentioned here. So by preparing this note 2, we'll get the cost per unit. So cost per unit is equal to total expenses minus scrap value divided by normal output. Total expenses. To get this total expenses, what we have to do? We have to add the debit side total column. So total cost, add these amount. 20,000 plus 2,000 plus 10,000 plus 2,100. You will get 34,100. Right here, 34,100. Add this unit column also, 10,000. Okay, clear this debit side. Total unit is 10,000 and total cost column amount total is 34,100. This is the total expenses. So this 34,100 we'll write here in note number 2. Total expenses is 34,100 minus scrap value. Scrap value is 150. So write here 150 divided by normal output. Just we have calculated normal output in note number 1. That is 9,700 units. So write here 9,700. Calculate this. 34,100 minus 150 divided by 9,700 and you will get 3.50 per unit. So cost per unit is 3.50. This amount will take here output transferred to process B. Quantity we have already written there. So the cost per unit amount is 3.50. Multiply this 9500 into 3.50 and you will get 33,250. Okay. So this debit side we have already calculated. Quantity we have got units 10,000. See the debit side and total cost is 34,100. Same quantity we'll write here. Credit side 10,000. Okay, from this 10,000 minus 300 and minus 9,500. Okay, from 10,000 minus 300 and minus 9,500. And you will get the difference of 200 units. Correct? On credit side, you will get the difference of 200 units. And this 200 units is called abnormal loss. So write the difference quantity 200 units and this 200 unit is treated as abnormal loss. So in this process A we have got abnormal loss and the loss is 200 units. Rate per unit will take the same 3.50 which we have just calculated in note number 2. So write here 3.50 and multiply this 200 into 3.50 you will get 700. Okay, now total of this credit column will be the 34,100. 150 plus 700 plus 33,250 you will get 34,100. Next we'll prepare the process B account. Process B account. Columns are same. So whatever the output we have got in process A, that quantity, that amount we will take as the input of process B. So in process A, we have got output 9,500 at the rate 3.50 and the amount is 33,250. So these all things will be transferred to process B account. So this 9,500 will take as the input of process B account. So right here process A, the quantity is 9,500, cost per unit 3.50 and total cost is 33,250. So this 9,500 is the output of process A and here it is the input of process B account. Next we'll take the expenses. Sundry expenses, see the B column, amount is 3,000. So take here sundry expenses, amount 3,000, wages 16,000, expenses 2,375. All these related to B, process B, we have to take here. Okay, expenses are over. Now we'll calculate the normal loss. In process B, there is a normal loss of 5%, which we'll calculate on the input. So in process B, input is 9,500 units. So write credit side, normal loss. And in bracket, input 9,500 into normal loss is 5% into 5%. Multiply this 9,500 into 5%, you will get 475. So in process B, there is a loss of 475 units. And this wastage or normal loss is sold at scrap value 1 per unit. Okay. Wastage of process B is sold at rupees 1 per unit. So cost per unit column write rupee 1. You will get the same amount, that is 475. So whatever the output you will get in process B is transferred to finished stock. So right here, output transferred to finished stock. In process B, output is 9,100 units. So in units column, we'll write 9,100. Cost per unit, we have to calculate. So we'll prepare the notes. First, we'll calculate the normal output. Normal output is equal to input minus normal loss. In process B, input is 9,500. Take here 9,500 minus normal loss. Normal loss quantity is 475. Right here 475 from 9,500 minus 475, and you will get 9,025. This is the normal output. Next, we'll calculate the cost per unit. Cost per unit is equal to total expenses minus scrap value divided by normal output. Total expenses, for that we have to add the debit side of the process account, total cost column. Add all these amounts. 33,250 plus 3,000 plus 16,000 plus 2,375, and you will get 54,625. Okay, total of these four amounts. You will get 54,625. So right here total expenses 54,625 minus scrap value. Scrap value is 475 divided by normal output. Normal output is 9,025. Calculate this. 54,625 minus 475 divided by 9,025, and you will get 6 per unit, rupees 6 per unit. So cost per unit is rupees 6. So quantity we have written here, output transferred to finished stock, that is 9,100. Rate per unit we have calculated. So write here rupees 6. Multiply this 9,100 into 6. You will get 54,600. So compare this unit column. Debit side, units is total units is 9,500, and in credit side, units are 9,100 plus 475. You will get 9,575. Yes, total of these two amounts, 475 plus 9,100, you will get 9,575. Means in debit side there is a difference of 75 units. So first we'll close this. Credit side units is 475 plus 9,100. We will get 9,575, and total cost column 475 plus 54,600, and the total is 55,075. Same units and total amount will write debit side. Unit 9,575, and total cost column will write 55,075. From 9,575 minus 9,500, you will get difference of 75 units. So the difference in debit side is treated as abnormal gain. So in process B, we have got abnormal gain. So right here, abnormal gain, and the unit is 75 units. Rate per unit, we'll take this rupees 6. Right? 56 and multiply this 75 into 6, you will get 450. Now the total will be the same, that is 55,075 total cost and units 9,575. Got this process B account? In process A account, we have got abnormal loss, and in process B, we have got abnormal gain of 75 units. So the process accounts are over. Next, we'll prepare the abnormal loss account, abnormal gain account, and finished stock account. Let's prepare the abnormal loss account. So the columns are say particulars, units, cost per unit or rate per unit, total cost, particulars, unit, rate per unit, and total cost. So in process A, we got the abnormal loss. So in debit side, we will write to process A account, and the quantity is 200 at the rate 3.50 and the amount is 700. So this loss is sold at rupees 50 paise per unit. Credit side right, buy sale of scrap, units are 200 and the scrap value in process is 50 paise. So take here 50 paise, 200 into 50 paise, answer is 100. So now we close this debit side, quantity 200, total cost 700. Same amount we will write in credit side, units 200 and total cost 700. From the 700 minus 100 and you will get the difference amount 600. So this write by costing profit and loss account. Next we'll prepare the abnormal gain account. In process B we got abnormal gain. So credit side write by process B account. Quantity is 75, rate per unit is rupees 6 and the amount is 450. Okay, for all these things, you can refer the process A account and process B account. Credit side right to sale of scrap, units are 75 and in process B, the scrap value is rupee 1 per unit. Right here rupee 1 and the amount is 75. Close the credit side, units is 75, total cost 450, same amount we will write debit side, units 75 and total cost is 450. From 450 minus 75, you will get the difference amount 375. The difference amount is 375. To that right, 2 costing profit and loss account. The last is finished stock account. So whatever the output we have got in process B, that is transferred to finished stock account. So debit side right to process B account and the quantity is 9,100 units. Rate per unit is rupees 6 and total cost is 54,600. Here the solution is over. Hope you like the video. Thanks for watching.